What's up, traders? Happy weekend. Today I'm going to do my stock picks a little bit differently. I'm going to give you a more in-depth view of how I actually make these picks. Besides going through a list of stocks, which is really the boring part, I'm going to show you the analysis. So I have 5 stocks for the week of, what week will it be? Give me a second here. Bring this up. It's going to be the week of February 9th. So I'm going to look at my top 5 stock picks for February 9th. These are usually swing trades, so I'm looking at short-term technical analysis. We're going to open up 2 websites. One is finance.yahoo.com. In this section, actually, you want to go to the interactive chart. So you might want to just, if you're going to be using this often, you might want to get a portfolio, and then you can just get into it much more easily. But this is mainly a news page, and we're not going to use the news part. We're actually going to search for a stock. So I'm going to pick out the first stock, which is actually an ETN or ETF. Sorry. So we're going to go there, grab the ETF, and we're going to go down to where it says interactive charts on the left side. Click that. And because we are using candlestick charting, we want to look at the candlesticks. It's going to open it up as a line usually, but we want to look at the candlesticks. So you're going to click here, select candle, and then we're going to look at the candlesticks per day. What we have here is per hour or per minute, I'm not sure. But we want per day, so we actually click on 1 month, and then the daily candlesticks will appear. So that's the first thing we want to do. The second is we want to go and check the resistances and the supports of that stock. So we're going to type VXX into the website stockta.com. That will give us a list of resistance levels and support levels. And it will also give us, so here are the resistance and supports. You can see them on the graph with the green lines and the red lines. Green is resistance, red is support. Then you can go down and see a bunch of different other chart indicators. Usually the important ones are only stochastics and the Fibonacci's. So you want to look at the short term, go down, Fibonacci's are bearish, stochastic is neutral. Okay, so that's basically to make a very quick determination as to whether you want to buy a stock or not. Those are the things you need to look at. So we're going to start out with the candlesticks. We always want to make sure that the most recent candlesticks are looking profitable, looking bullish. Now what we do see here is a candlestick pattern that's called the bullish engulfing candlestick. The bullish engulfing candlestick is a white or green candlestick that more or less eats the previous smaller red candlestick, and that usually predicts a coming bullish trend. Now why I choose VXX was, we have actually a few reasons for this. First of all, VXX is it's a fund. It just said ETF, now it says ETN. It doesn't matter, they're basically the same. What it does is it tracks an indicator in the market and allows you to make profit when that indicator goes up. So what we're actually tracking is the volatility, the craziness of the market. And the market has become quite a bit crazier nowadays than it was a few weeks ago. So we are actually going to be a bit bullish on this just by common sense. But at the same time, we don't want to make our judgments by common sense. We want to make our judgments by technical analysis, statistical backed indicators, one of which is this bullish candlestick pattern. Another is, you see how we have a gap here between these 2 red candlesticks, and that gap has a low volume. Usually that gap will fill. Now technically it did fill yesterday. If you could see the shadow, it filled this gap, but I'm going to say that it's actually going to fill with a candlestick. So I am bullish for 2 reasons on this stock, just based on this chart alone. Now we go back to the stockta website, and we're going to look at the levels of resistance and support. Here is the current trading price of VXX, 34.3, and we notice that that is above a very strong, this is the strength, the confidence level of the support. We are above a very strong level of support. What that means is, even if we're wrong and the stock doesn't go up, at the very worst, well, usually at the very worst, the stock will drop to this number but not go below it. Something very strange would have to happen, usually something related to news, For a indicator such as VIX, the news wouldn't be company news, but it would be more general market news or political news. If we have some bad news coming up, then it might break again below that level of support, but that's unlikely to happen. So this is a very good short-term pick, and it could actually be a good long-term pick based on what's going to happen in the following months in the market. So that's my first stock pick of the week of February 9th. Now we're going to switch to another one. You just go to symbol right here, click on it, type in the stock you want to look at. We're going to look at a stock under the name CY. It's a semiconductor producer. Looking at the candlesticks, we see another bullish engulfing. This one's a little shorter, but it's still reliable. Now this candlestick is also matched with a, let's see here, with a strong support below it. Isn't that right? Is that right or wrong? No, I'm sorry. Okay, let me rephrase why we're making this play. There's a strong level of resistance just above it, a tiny bit above it. Now, usually you don't want to make a bullish bet when you have a strong level of resistance above it. However, if the candlestick pattern says it's going to be bullish and there's a resistance level that says it's going to be bearish, then you look at other indicators. And that's actually a very, very profitable play, but at the same time somewhat risky. It's very profitable because once a stock breaks the level of resistance, that level of resistance becomes a support. And if you don't have any higher levels of resistances, you see how these confidence levels are all very low. If you don't have any level of resistance that's higher than that, and the stock breaks that level of resistance, then there's no telling how far it can go. So we're going to look at those other indicators down below, and we see bearish Fibonacci's. So actually, I'm going to revoke this stock. It looks bullish in the long term and intermediate term. I originally chose this because I like to see this candlestick pattern right below a resistance level, because if it does break that resistance level, then the sky's the limit. So here's what I'm going to do for this one. I'm going to revoke the selection of CY as a stock pick, but I'm going to say watch it, watch this stock. If the stock does indeed go over 14.7 on Monday, then buy. If it doesn't, then don't buy. Okay. All right. The next one we're going to look at is SPF, which is not a sunscreen company. It's a housing building company. So these people provide new housing complexes in major metropolitan areas. Now again, we see a very long bullish engulfing candlestick. This one's a little bit different because generally a bullish engulfing candlestick has its red candlestick in the middle. This one's much lower. Also, we see that the volume is very high, which is indicative of a news event. Could be the production of earnings or something related to it. There you go. So they beat out their predicted earnings, hence this large volume. Now, the problem with a stock like this, where you see a large volume with a large bullish candlestick pattern, but without a gap, usually what would happen would be you would see a gap. There might be a blank space here, and then above it you'd see the green candlestick pattern. So actually there would be a space between this red candlestick and the green candlestick, but we don't see that, and that's a little bit strange, though it could mean that the earnings came out early in the middle of the day instead of before the markets opened. Generally when this happens, in my experience, is you will see that this still acts like a breakaway gap where the next day the trend continues upward, but you actually might have the gap on the next day or the day after the next day. And in that case, that gap is what I call a amateur gap. It's a gap that's caused by a reaction to professionals trading. And you can actually make quite a bit of money on that, but you do have to watch the stock carefully, because after that amateur gap, the stock price will top off and then you've got to sell it. So this is something I would recommend to someone who has the time to watch this daily, and after that gap occurs, make sure to get out. So this is not a sky's the limit stock, but this is a let's make a quick profit stock. Let's look at the levels of support and resistance. We don't see anything interesting in support or resistance. The stochastics say that it's oversold, and like I said, when you see that next gap, because the professionals already know it's oversold, sorry, overbought, what am I talking about? It's overbought. They will sell off after the coming gap, and that would drop the stock price. So that's exactly what I'm talking about when I'm saying you've got to watch this carefully. It's probably going to go up simply because of the momentum and because of sentiment toward this stock, but at the same time, because it's already overbought, you know it's going to have to drop soon. However, the Fibonacci's tell us that if it does drop, it will probably retrace its steps, though probably not completely, in my opinion. So my advice for you is to get in on this, watch it rise a bit. If you see a gap, get out after the gap. Make sure you take your profit here quickly. The third stock we're going to look at is I believe it's an aluminum company or steel company. So it's actually a penny stock. Technically, any stock that trades at under $5 is a penny stock. We see a couple interesting things here. We see a number of gaps. One is up here, which is not filled. That's because that was a breakaway gap. As you can see, the volume was large, so it doesn't need to be filled. Then we see another gap here that should have been filled, which it was. And then another gap here, which should have been filled because the volume's low, which it was. And then another gap here that should be filled, which it has not filled yet. So just looking at the gaps, my guess would be that the trend is going to turn downward. However, looking at the candlestick, again, we see a bullish engulfing candlestick. So the candlestick and the gaps don't match in their predictions. Therefore, we go and we look at what it says in stock TA. Now, what we have here is a stock trading above its support level, but actually below a resistance level. Now, I'm going to say that it's going to stick between these two simply because of the strength of both of these resistance and support levels. Now, why would we want to buy a stock that's below a resistance level? Simply because we know that we can make, if it touches that resistance and goes back, we know at least we can make 8 cents. Is that 8 cents or 80 cents? 80 cents. We can make 80 cents per trade. So you're spending $4, you're spending $4.20, and you're getting back $5. That's a good deal, right? The other indicators don't look very good, but simply based on the fact that this level of support is above, check it out, the level of support is 4.05, it's above the gap. See the gap right here? The gap is below 4. So even though this is an area gap and technically should be filled eventually, it's probably not going to be filled until we see a short-term bullish trend, which I believe will lead us up to $5. So we're going to look at that as a price point. We're going to hit somewhere between $4.50 and $5 and then get out at that time and take our profit. This is a short-term trade, and it's a penny stock trade, so pretty much anybody could afford this play. Next one we're going to look at is it's usually something you wouldn't want to play as a swing trader. It's a high yield bond ETF. It basically tracks corporate bonds and lets you invest in those corporate bonds without having to buy the bonds yourself. What's interesting here is we see a up gap with a high volume, which indicates that it might be a breakaway gap to where this stock continues increasing in price. The other gaps, like this gap right here, was a small volume gap and within the trading region, so it's probably an area gap, and you could see it actually does fill. But this one is not only with a high volume, but it is also outside of the trading region. It's a small candlestick. It's almost a doji star because of the body being so small, but generally that means we are going to see an upward trend unless the next day we see a red candlestick below this doji star. If we see that, that candlestick pattern becomes an evening star and is very indicative of a bearish trend. So I highly recommend that on the next day we watch to confirm that this doji star candlestick pattern is actually what we're looking for. Now, how would you confirm that on Monday? Well, what you're going to look at is the opening price of the stock. We want the opening price of the stock to be at least as high as the opening price on February 6th, which was 39.21. This is a decent stock to, this is a decent ETF, or is it ETN? ETF. It's a decent ETF, not only for a swing trading, a short-term trade, but it's also decent for a buy and hold trader. We're going to look real closely at the support levels for junk. I call it junk. And we do see strong support and not very many strong resistance levels. So this would be very good for a buy and hold, a long-term investment. And it's also good for swing trading because we see an indication that what we have is a breakaway gap which tends to continue upward. The other indicators are all good. Technically, this bond, which doesn't look like it, but technically it is oversold, so it's going to continue upward. The Fibonacci's for the short term look good and the intermediate term look good, which means that if we do see it fall a bit, it's likely to retrace and reverse and go back upward. In the long term, we don't really care so much because we're not going to be buying and holding this generally. And if you do, I'd say don't hold it for maybe more than 6 months or so. Well, if you're a buy and hold, I'm not a buy and hold investor, so I'll just give you this advice. If you're a buy and hold investor, stay update on this stock. So continually be looking at the candlesticks and the news and the support levels and resistance levels changes as you hold that stock. For everyone else who's a swing trader, let's try to look for a price target. I'd say let's go up to at least $43 and then try to get out around there. Okay, so those are my top 5 stock picks for the week of February 9th, 2015. Good luck.